All right, good morning, everyone. It is, let's see, 8:47 in the morning of February 18th, 2021. And today, this is my pre-market strategy session. So here's something, and this is where I'm starting it. And I've actually been watching this develop now for quite a while, since this. Here, we're looking at a head and shoulders pattern right here. There are a lot of people who are speculating that this entire thing is the left shoulder, here's the head, here's the right shoulder, and they're putting the neckline in right here. And I'm telling you that's wrong. And here's the reason that that is wrong. Head and shoulders formation, a proper head and shoulders formation, is a reversal indicator. It is a reversal pattern, pretty similar to a Wyckoff distribution, really. Rather, a head and shoulders is actually kind of just a simplified Wyckoff distribution pattern, actually. But here's the thing, right? Is that the direction of the neckline, the slope of the neckline, in this case, this neckline right here, this dark red. Let me make it a little bit bigger so it's easier to see. This neckline right here is pointing in the same direction as the trend. And in a proper head and shoulders pattern, the neckline points in the opposite direction of the previous trend. So here we have an uptrend. And if this is a reversal pattern, which it is, it's a reversal pattern, whether you want to call it Wyckoff or head and shoulders, whatever, then the next trend will be in that direction, the downward direction there. So here we go. Okay. This is not a head and shoulders reversal neckline. Get rid of that. And don't listen to anybody that's trying to tell you that. Now, let's get rid of this. We'll keep this as the head. Now here's the thing, right? Here we go. This little mound right here, this is the left shoulder. This is the head. This is the right shoulder. And check out that neckline. So it's rare that I would say most head and shoulders patterns fall apart. Most head and shoulders patterns do not play out. Eventually, at some point, for example, if I'm watching something and I'm suspecting that there's going to be a head and shoulders pattern put in, it's quite often that the left shoulder, the high on the left shoulder, will get blown out, right? Like here you go right here. Actually, that's right. I remember now. Actually, I'm getting a little ahead of my skis here. So the height of the left shoulder over here is at 472.57, and you can see here on this day, on the 12th of January, it made a high of 473.20, and then here on the 13th of January, it made a high of 472.88, both of which are higher than the left shoulder, the high on the left shoulder. So what do I make of that? Well, technically speaking, it takes out the possibility of the head and shoulders formation. Well, so nothing is so there are some picture perfect formations do come along, like Baba. Let me move over to Baba here real quick. Baba put in a picture perfect head and shoulders here, back here on this date. Picture perfect. It doesn't get any more picture perfect than this head and shoulders pattern put in by Baba back here between, it took the 21 of August, late August to December. So late December. So was that August, September, October, November, December. So it took 5 months for this thing to play out, right? And then sure enough, look at this, it just it broke the neckline, and then has just tanked for the rest. I mean, you could have been short Baba back here at 240, and you'd be, up 100% on your shorts here. What is that? About a year, 2 years later. That's a pretty good return on a head and shoulders pattern, and it's picture perfect. Here's the trend. Here's the neckline going in the opposite direction of the trend. Here's the break of the neckline. I mean, it's picture perfect. It doesn't get any more picture perfect than this, right? So over here on what's going on with the SPY, let me get rid of these arrows that I put in here. Let me get rid of these drawings real quick. Let's go back to the SPY here. So here, what we have is, something a little bit less than perfect because of this sort of left shoulder blowout. But let's fudge it a little bit and call this entire part right here the head here. Let me get rid of this. We'll get this right here, and we can call this entire formation right here the head. How about that? And so the top of the head's right here. Or what we can say is, well, these 2 days never really closed above the left shoulder. So there is a certain degree of seeing what I want to see in this pattern, right? So that leads me to a lower level of confidence of this head and shoulder, possible head and shoulder formation playing out in the terms that a head and shoulder pattern would play out. In addition to that, if this head and shoulder pattern plays out, look at the serious amount of downturn required for this head and shoulder pattern to be successful. Like, so for this head and shoulder pattern right here to break down below this neckline, let's just do a quick here. Let's see how accurate I can get this. We'll call it from today, it's got to break down another 10% real quick and in a hurry in order to break that down line. And then it's got to continue to plunge even further down than that. Are we at that point? I don't know. I mean, anything's possible. So in any case, the probability to put probabilities on your side is basically all of trading. I mean, really, to put probabilities to put the probability of the direction of your trade is the most basic thing you can do in trading to be profitable. That is, trade in the direction of the trend. So whether this plays out or not, whether this head and shoulders plays out successfully or not, the trend is down. We're working our way. This is right now we're in a correction. Pardon me. Right now we are in a correction, and it is working its way into being a bear market, which means down 20% from its highs. And why not? Let's look at this on not a daily scale, but let's look at this on a weekly scale, and then we'll scroll out a bit. Let me get rid of some of this drawing and stuff. We'll get rid of these brush marks. Just kind of clean it up a bit so it's easier to see. Get rid of that trend line. Let's get rid of these rectangles. Let's get rid of this horizontal ray. Get rid of that horizontal ray. Get rid of that rectangle. Get rid of that. Got a lot of stuff drawn on the SPY here. Let's just take a look at this thing. Take a step back and look at that. It's parabolic. This thing, I guess let's look at it on a log chart here real quick. Let's see. Okay, on a log chart, it's not necessarily parabolic. But we are getting, it is slightly parabolic on the log chart. It's still working its way up into, a rather steep. This is a rather steep incline right here, even for a log chart. Where you want the slope to be constant on a log chart. It's pretty close to constant. I don't know. We're coming into either at least a correction and more exploration of the down phase of the correction, or we're developing into a bear market, which is what the professional hedge fund consultancy firm is saying, is that we are in a developing bear market. So you can expect between now and the next 6 months or so for the market to be down a total of at least 20%, from its high. So from its high right here down to 20%. Let's just go to 20% real quick. And this is the SPY. We're looking at roughly 384 on the SPY between now and the next 6 months. So will it be? Let's see. It's January. So let's go out to June, to early June, March, April, May. Here's early June right here. Let's pop it up just a tad bit more, just to 20%. Technically speaking, a break of 20%. So I have it at negative 20.1%. And technically speaking, a break of 20% is bear market territory. Okay, so 383.51. Okay, that's the way things are looking right now. And this is from the start here. So it could take another 6 months from where we are today, instead of and we can project that out too. Let's go from here. Let's see, from where we are today. Oh, let's do it this way. Let's suppose it takes 9 months instead. So that's September, early September. So we'll call it September the 12th, my birthday. That's roughly 19. So yeah, okay. Perhaps we do enter into the sort of this thing right here, but who knows? I mean, however, one thing that really I think you can do with confidence is trade in the direction of the trend, and right now the new trend is bearish. So today again, yesterday I was looking at bearish setups. Got pretty decent bearish setups yesterday, and that's what I will be doing again today. In the pre-market here, yesterday's close, I mean, you can see here, yesterday's a pretty big down day here, and I managed to jump on this ride at a pretty decent level after it broke its previous day's low right here. This is where I jumped in right at 350 roughly, and it started to break down below the previous day's low. That's where I jumped in. And there happens to be a coincidence there that spot, that 350 spot roughly, was just in the past couple of days. There was a little bit of price action, just purely coincidentally. I just like to stack coincidences on top of each other, because just the more coincidences you have at a particular price level means you have more people looking at that same price level, whether it's Fibonacci, daily price levels, whatever. The more coincidences you can stack on top of a particular price level for a particular trade will increase the probabilities of entering into a profitable trade. All right, everybody. Yeah, that's pretty much it today. And if so, I happened to jump into the Qs and Tesla yesterday, and that's probably what I'll do today. I will keep an eye on the relative strength indexes here for a bearish setup, and in the bearish setups, you want to sell the rips, buy the dips, which is what you always want to do. You always want to buy the dips and sell the rips. It's just that one comes before the other. In this case, you're selling in shorting, you're selling before you're buying, and going long, you're buying before you're selling. It's kind of a reverse process there. So yeah, Tesla and Amazon have both been really great movers and rather predictable. They've been, rather, the sort of traditional setups. They're not too tricky. They tend to do what you expect them to do once they break a price level, so on and so on and so on. So the SPYs and the Qs probably. We're gonna have to see, what kind of volumes coming in today, how things are going and stuff. But yeah, the SPYs, the Qs, Tesla, and Amazon, and I started averaging into a short position in plug back here a couple days ago. We'll see how that works out. It looks to me actually that it could go a bit higher, but I'm putting 6 months on this trade. So I am willing to average into a position as high as $24.76 on a short unplug. And then if it gets away from me by 10%, which means $2.40 away from me on my trade, I'll have to cut losses right there, So we'll see how that works out. And yeah, all right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at Monday morning's strategy session. And have a great weekend. I am out.